Hey folks, T-Buzz here. I just wanted to talk to you about what happens to most traders. They have positions on, and then when they go to bed at night, I always say that's where the Grim Reaper roams when you're sleeping, and you wake up next morning and you're trying to play catch up or whatever, and especially in bull markets, because all of a sudden you have what we call a giant air pocket created. Sometimes it's there's a setup that I like to tell people about, but let's just talk first about risk in trading, which there's some, no matter, can't get out of it if you're trying to make more than what a T-bill will pay you. And secondly, past performance is not indicative of future results. Let's look at some history of corrections. I think corrections are interesting in a bull market because some of them are violent, some of them are slow, some of them drive you crazy. But there's different shapes of corrections. For last Friday, April 19th, SPX had gone over 5 months without a 5% correction, which is unusual for it to go that long without having at least some backing and filling during a rally stage. Since 1927, a 5% correction in SPX has historically led to a deeper decline. You can go back and look at it and you can check this out, but I'm giving you what I would call the core information that you can use as a trader. The average drop, once it goes 5%, is around a medium average of 8.23. And then the average, if you do it just mathematically, it's 11.83 to give you some target area once you get that 5% correction. The duration, this is important. Also, you can map out the time all this should occur. 21 days from the start to 21 days, and you hit at your target prices. Or it could extend out to 38 days. How do you use that information? Well, you use that information through several different strategies. That's where, you always hear buy on the dips in a bull market. Well, this is where you sell on rallies because the trend is going to search out during that dark period, we'll call it, the correction period. And this sort of helps you know what to be and look for when things set up. Now, what I did, I tried to do some projections based on the current information. I looked at the 52-week high, and then I said, okay, from that high, what would the key numbers be if the market fell 7%? And you can see 49.63, which, by the way, is the low we went to the day after we closed below 5% from the high. And then it bounced, and we're currently in that back and filling mode of the correction. The NASDAQ went down as low as 9%, 170.25. And this is what you look for the NASDAQ to lead the e-mini. And then, of course, it's just not straight down. They come down, they come back up, and they help you sort of get a pinpoint spot on the market. I did it also for the SPY. Here's some numbers you can use. 9% down would be 477.39. And when you're trading at 503, you can do the math. These are opportunities. QQQ is 408.59 for 9% down. And I'm focusing on 9% because I think that's a realistic target once one of these things start, 9%. And then, of course, the XSP, which I do a lot of trading in, is 479.10. Now, other things at DTI to help you narrow this down and help you stay current with the market, there's 3 metrics I use. Where do we open the year at? This is the ultimate test, whether you're bullish or bearish for the year. And you can see right there, we open the year at 48.68. So it does say there should be a test of that number at some point in the process. And then, of course, you look at the monthly open to sort of guide you what's happening this month. We opened the month at 53.14. And then when this was made, the weekly open was 51.66. That number changes every week. When? On Mondays. It changes. And so you keep up with the current, speed or current reversals or current sell-offs and rallies by using those weekly open in conjunction with the main numbers, which is your open and monthly open. And you always got to be aware, how far are you away from the next monthly open? Because that's when that metric will change. But this is how I do it. I watch the yearly open for general direction. I watch the monthly open for during the month I'm in, and I watch the weekly open depending on the week I'm in. And I keep up with it as it's happening. And it helps me pinpoint exactly where I'm at in the process if we are going to extend down to 9%. Now, let's look at the 10 tickers. I always do the 10 tickers every Sunday night in my T-Buzz All-Stars, and I try to show the variance in certain stocks. For example, if you look at the mini at 5.5, 6.50, that's where we started this week at, down 5.5, 6.5. Then you look at Apple, which is down 16%, a definitely stock you want to avoid in 2024 when you're down 16.80%. AMD's down 31%. And then you'll go to the yearly open and check the yearly open. Well, Apple happens to be below it. AMD happens to be above it. So that's telling you AMD got overdone. That's the way I look at it. Amazon's only down 5.60. American Express is down 6.10 and actually is in the best shape of every one of these tickers. Mara is down 55.90% this year. DJT is a stock I do a lot of trading in, been very successful by keeping up with these metrics. It's down 58%. Again, where did it go to? It went to the yearly open, and from the yearly open, it bounced. Now it's currently about 35. It's in the process of coming back up. SPY down 4.8%, and the QQQ is down 5.80. Now, if the S&P SPY goes to 464 and the ES drops back down to 449.65, we'll be around 7% down from the high. So when this tape's being made, it's a big earnings week. You got some big boys announcing, folks. That's what you got to look at for that short term to see how the market responds to them. But these are the numbers that are hard and fast until that time period's over. So if we don't go down 8, 9%, the cloud doesn't go away until the earliest, about 21 days. And I think we calculated May 15th when the cloud is removed from the market. And QQQ goes to 408. NASDAQ drops back down to 171.81. You've got a pretty good opportunity if you can catch it. And the best time to catch that NASDAQ will be during that earnings phase of Tuesday, Wednesday, and Thursday. So I hope this helps you when you put things in perspective about corrections in the market and a bull market. Notice I say in a bull market. And that's judged by where we are relative to that ticker's yearly open. That's the DTI method in a nutshell. You always start with the yearly open, and you use that number all year long. Folks, as I always say, I'll see you on the flip side.